Assalamualaikum. Today, me and my friend I would like to present about our financial analysis. Okay, let me explain more about their company background. One of the company that we choose for this project is HSS Engineering Sdn Bhd. It is the company of for engineering and project management service. It is the company that are founded by Kunal Stipalan and late Shatan Kumar in 1984, both with a dream to build consulting firm but have no experience for running a consulting engineering practice along with no network of business connection and no capital. But the help of Tun Haji Hashbuddin Hashim, they are able to open their consultant. In return, Hashbuddin become the head of HSS company, Sdn Bhd, while the two SS stand for Satan Kumar and Stipalan. After 2 years of struggling to pursue their dream, they managed to get their first project but without an office to meet the client. With a friend help Datuk Sri Yap Chong Lee, who let them convert a small space in his workplace into HSS temporary workplace.
For our second company, we choose Kumpulan H&L High-Tech Berhad. Kumpulan H&L High-Tech Berhad is a Malaysian-based investment holding company. The company is engaged in the manufacturing and sales of precision engineering molds and machine parts. Also, it customizations or precision engineering plastic injection molds and component catering to sectors such as automotive, electrical, industry, and medical. The company was founded in 1994 and were known as Hartley Engineering Works. Also, company H&L is operated through four segments including manufacturing and trading, property investment, joint property development, and plantation.
And then I will explain about their achievement. As you can see, HSS Engineering Sdn Bhd is one of the leading engineering consultancy firms in Malaysia. Is as a pioneering entity listed of the main market of Bursa Malaysia Security Berhad. Second, they have managed to contribute thousands of professionals to its success and their engineers being constituting more than half of the of the workforce. Third, the group has a very outstanding and excellent accreditation under multiply ISO standard. And then fourth, the group also have a very outstanding contribute towards Malaysia development for the past 2 decades. Fifth, one of the outstanding is in 2017, where HEB, accurate SMHEB, Engineering Serbrahat, it is the main of for the Malaysia water sector that can be tracked back to British colonial era. Six, they are managed to pioneer the early AutoCAD for transformative power of BIM since 2012. Seven, they have managed to be done notable projects such as Kawasan Damansara Township Development, showing the group is advanced solution and that include 3D modeling, clash detection, resolution, and bill of quantities.
Kumpulan H&L High-Tech Berhad also get an achievement as they got awarded the Asia Pacific International Malaysia Honestly Enterprise Careers Award in 2003. They subscribed for 140,000 ordinary share of 100 baht each at par in H&L High-Tech Malt Thailand, representing 70% equity interest in the share capital of HTM.
Next, I will explain about their liquidity ratio. First is current ratio. Current ratio is the financial ratio that can help to manage and measure a company ability for them to pay their short-term liability using their short-term asset. This can show that the company financial health to the internal and external user. The formula will be as the below. Uh, Current ratio divide to current liability. For HSS Engineering Sdn Bhd, the current ratio will be evaluated like below. As you can see, 2020, 21, 22, and 23 belong to HS Engineering Sdn Bhd. right? First is 2.19 time, second is 1.57 time, third is 0.59 time, and fourth is 0.55 time. So this is a graph of current ratio for HSS Engineering Sdn Bhd. To interpret current ratio for HSS Engineering Sdn Bhd show decreased trend over the time, which in 2020 until 2023. A decrease over the time might indicate that the company might struggling in managing its short-term liability.
Next, I will explain about the liquidity current ratio for kumpulan H&L High-Tech Berhad. To interpret current ratio for kumpulan H&L High-Tech Berhad, show decrease and increase trend over the time, which is in 2022 is 9.31 times, but in 2021 is 13.71 times. Decrease in 2022 9.73 times, and then lastly increase in 2023 is 10.37 times. A decrease over the time might indicate that the company might struggling in manage its short-term liabilities, but so far it seems like managed to keep their consistency. Based on the observation from 2020 to 2023, we can see that there is a huge decrease in 2022 for ability of shareholder current asset to pay their current liabilities. It also shows that in 2022 there might be risk of shareholder.
I will explain about the quick ratio. Quick ratio, or can be named as a acid test ratio, is one of the financial analysis that can be used to monitor and assess the company to pay their own short-term liability using the most of its current asset, which is in inventory. It is most accurate and better one of the measure the liquidity as doesn't include inventory and is fewer liquid asset to be in the calculation. Quick ratio, as you can see the how to use the quick ratio. Okay, for the HS engineering standard Berhad, the quick ratio will be a bit like this. To interpret on 2020, the quick ratio for HS engineering Berhad is 1.93 times, while in 2021 is 1.5 times lower than 2020. In 2022, it is 0.5 times, while in 2023 is 0.5 times. The company show a decrease in their quick ratio over the time through 2020 till 2023 for a quick ratio. The higher is or over one is better, and it is considered as satisfactory because it can show that the company is strong liquidity position as they can over the short term liability.
Next is the liquidity quick ratio for kumpulan H&L High-Tech Berhad. To interpret, in 2020, the quick ratio for kumpulan H&L High-Tech Berhad is 9.23 times, while in 2021 is 13.64 times, higher than 2020. In 2022 is 9.72 times, while in 2023 is 10.36 times. In the graph, it shows that the company decreased in their quick ratio over the times in 2021 to 2022. For a quick ratio, the higher is or over 1 is better, as it considered satisfactory because it can show that the company is stronger liquidity position as they can cover the short-term liabilities.
So next, I'm going to explain more about their efficiency ratio. Average collection period. For average collection period is also one of the most important thing to be seen upon in financial analysis. It helps to measure the efficiency of the company to managing its account receivable. It also helps to see the average number of days takes for the company to collect payment for its customer after a sale has been made to the company. Alright, so as you can see here, it is for HSS Engineering Sdn Bhd is from 2020 until 2023, and this is the graph. The result for average collection period has been calculated. Thus, we will interpret it is based on the year from 2020. HS Engineering Sdn Bhd has managed to collect from account receivable within uh, 30.47 days, while in 2021 it's managed to collect 2.80 days shorter period of time compared to 2020, while in 2022 it is 1.44 days and 2023 1.04 day for its average collection period. This show that the company can quickly collect money for its customer, which actually is a very good result, and it help to improve that cash flow and help to reduce the risk of the bad debt.
So next, let's see the average collection period for kumpulan H&L High-Tech Berhad. So in 2020, average takes 154 days to collect the amount due from its trade debtor, while in 2021, average is take 105 days to collect the amount due, and in 2022, H&L High-Tech Berhad takes 98 days to collect the amount due from its trade debtor. And lastly, in 2023, it only 83 days. So, based on this observation from 2020 until 2023, we can see that the average collection period is decreasing. This shows that the customer are paying quickly, which might imply a change in terms of a more efficient credit department.
Next, I will explain about their total asset turnover. Total asset turnover is a measure for the company effective on how to generate the sale for investment in their asset. Alright. This is for HS Engineering Sdn Bhd. In the total asset turnover will be evaluated like this below. Okay, to interpret for the total asset turnover for HSS Engineering Sdn Bhd in 2020 is 0.05 time, 2021 is 0.007 time, in 2022 is 0.14 time, and lastly is 2023 is 0.09 time. This showed that HSS Engineering Sdn Bhd is less efficient in fully utilize their total asset.
So, to interpret the total asset turnover for kumpulan H&L High-Tech Berhad in 2020 is 0.15 times, 2021 is 0.15 times, in 2022 is 0.16 times, and lastly in 2023 is 0.16 times. This shows that kumpulan H&L High-Tech Berhad is consistent and maintaining in fully utilizing their total asset.
Hi, my name is Noaima Binti Aris, and today I'm going to present my part, which is leverage ratio. So for leverage ratio, we are using two methods for both company, which is the first one is debt to equity ratio and the second one is time interest earned. So the first one, debt to equity ratio, is a financial analysis that can be measured for a company's stability. It will review the asset and its debt so that it can help to gain the investor confidence for them to invest in the company, especially for the investor who are looking for growth-oriented investment. And the benefit for the company is strategic decision-making planning for future ahead. So the formula for debt to equity ratio is total debt divided by total equity. So now we will look into HSS Engineering Sdn Bhd debt to equity ratio first. So in 2020, they are 39.51%. In 2021, 30.12%. In 2022, 18.08%. And the last one, 2023, is 7.15%. So as we look into the graph, we can see a sign of decrease in terms of their analysis. So this indicate that the company might use a conservative financing structure with a larger portion of asset to finance through equity.
Based on leverage ratio, we can indicate that in 2020, kumpulan H&L High-Tech Berhad, their debt equity ratio was 29.15%, while in 2021, their debt equity ratio was 23.90%, and in 2022 was 29.39%, and lastly in 2023 their debt equity ratio was 27.42%. There is a huge increase in 2022 for the ability of shareholder equity to pay all unpaid debt in the case of market downturn. Based on the observation, we can see the consistency of the company for the ability of shareholder equity to pay all unpaid debts in the case of a market downturn. This shows that the company can maintain the lower their risk for the shareholder.
So now we will be moving on into time interest earned. So time interest earned is the financial ratio that can be used to analyze the company ability to meet its interest payment on their outstanding debt. It is an indicator for how many a company can cover its interest payment with their earning before interest and tax. So the benefit for this analysis is for internal and external user to see their credit worthiness. So the formula for the time interest earned is earning before interest and tax divided by interest. So we will now look into HSS Engineering Sdn Bhd. So for 2020, it is a 1.74 times. For 2021 is a 3.33 times. For 2022 is 4.84 times. And for 2023 is 16.47 times. So as we can see from the graph, it is showing a significant increase throughout the years from 2020 till 2023. So this value might indicate that the company's ability for them to meet its interest obligation from their earning before interest and tax. So that's all for time interest in HSS Engineering Sdn Bhd.
So next, for time interest earned for kumpulan H&L High-Tech Berhad, in 2020, their time interest earned is 6.35 times, while in 2021 is 33.20 times, in 2022 11.59 times, and lastly in 2023 is 12.52 times, showing significant increase in 2021. They drastically go downhill after that. This value indicate that the company decreased ability for them to meet its interest obligation from its earnings.
So moving on now is profitability ratio. So in profitability ratio, we are using two methods as well to analyze for both company. So the first one is return on equity, or we can know as ROE, and the second one is net profit margin. So we will look into return on equity first. So ROE is the one that can help to measure the profitability of its company between their relationship with their shareholder equity. So this will be an indicator on how effective and efficient the company are using their shareholders' equity to generate the profit itself. So the formula for ROE is net profit divided by total equity times 100. So we will now look into HSS Engineering Sdn Bhd first. For 2020, their return on equity is 1.75%. On 2021 is 3.98%. On 2022, 4.32%. And the last one, 2023, is 10.59%. So as we look into the graph, we can see that there's a significant increase in their ROE activity throughout 2020 till 2023. So in 2020, the low activity might be because of the company are hit by COVID-19 situation and slowly regain back its activity throughout until 2023. So the increase might indicate that the company are trying to use the shareholder equity more efficiently. So that is the ROE for HSS Engineering Sdn Bhd.
Next, I will explain about the profitability ratio on return on equity for kumpulan H&L High-Tech Berhad. To interpret, return on equity is to determine how well the company can generate income using investment from the investor. If return on equity 50% to 20% is considered as good, but if the value is more than 20%, it shows that the company is very strong generate income by investment. For kumpulan H&L High-Tech Berhad, using comparisons in year 2020, 2021, 2022 and 2023, in year 2021, we can see that kumpulan H&L High-Tech Berhad generate about 15.86% compared to the year 2020 is 2.52%, 2022 7.09%, and in 2023 is 7.51%.
We will now look into the second method in profitability ratio. So the second method to analyze is net profit margin. So net profit margin is a financial ratio that are needed to measure the profitability of the company to indicate the company's profit on how much it's earning for every RM ringgit of sales after all expenses, tax and interest that have been deducted. The formula for net profit margin is net profit divided by sales times 100. So we will now look into HSS Engineering Sdn Bhd net profit margin first. So in 2020, their net profit margin is 21.07%. In 2021 is 44.06%. In 2022, 46.76%. And the last one is 2023, 68.79%. So based on the graph that can be seen is HSS Engineering show a trend of increasing for the company, and it might indicate that the company is efficient in managing their expenses to its revenue. So this can indicate that they are strong in profitability. So that's all for net profit margin for HSS Engineering Sdn Bhd.
Next, I will explain about the profitability ratio for net profit margin for kumpulan H&L High-Tech Berhad. To interpret, the net profit ratio give a measure of company capability to keep expenses under control. Based on the graph above, net profit margin performance for kumpulan H&L High-Tech Berhad in the year 2021 has increased from 84 to 21% to 2020 with 13.30%, with 2022 34.37% and 2023 37.40%. This shows that the kumpulan H&L High-Tech Berhad generate net profit effectively in 2021. To generate more profit in the future, the company should revise and control its expenses as well as avoid unnecessary expenses.
Now, moving forward with our analysis is trend and comparative. After done 4 financial analysis, which is liquidity ratio, efficiency ratio, leverage ratio, and profitability ratio, we will now see the trend and compare between two companies, which is HSS Engineering Sdn Bhd and kumpulan H&L High-Tech Berhad. So the first one that we will look into is liquidity ratio. But we are using quick ratio to see the trend and compare between two companies. So in the graph, the blue one is HSS Engineering Sdn Bhd and the orange one is kumpulan H&L High-Tech Berhad. So based on the graph, we can see that from 2020 until 2023, HSS Engineering Sdn Bhd is rather low compared to kumpulan H&L High-Tech Berhad. Their graph is actually decreasing and staying below 2. So this might indicate that they might not have enough liquid asset to cover its short-term liabilities. But it is different case for kumpulan H&L High-Tech Berhad that are higher and more consistent, except for 2021 where they have significantly higher than compared to the 3 years that are shown in the graph. They are maintaining above 10 that prove that the company have a stronger liquid asset that can help to cover their short-term liability. So to compare, kumpulan H&L High-Tech Berhad is much more better in terms of liquidity and consistency even when they have fluctuation shown in the graph. So moving on, we will look into efficiency ratio, which we will use average collection period to compare between two companies. So as usual, the blue one in the graph is HSS Engineering Sdn Berhad, and the orange one is Kumpulan H&L High Tech Berhad. So based on the graph, we can see that HSS Engineering average collection period are 30.47 days, then starting to decrease until 2023, which is 1.04 days. This indicates that they can receive from account receivable more quickly. Meanwhile, different case for Kumpulan H&L High Tech Berhad, which is they are more higher in their average collection period compared to HSS, but they do show signs of decrease over the year, but still high for their average collection period. So to compare, HSS Engineering is much more better and efficient in collecting its average collection period compared to Kumpulan H&L High Tech Berhad. Because they are showing a great decreasing, so they have excellence of record of collecting its account receivable throughout the year and consistency towards the 2022 and 2023. So that's all for efficiency ratio.
So for the leverage ratio between these two companies, from 2020 until 2023, is that HSS Engineering Berhad managed to reduce the debt equity ratio through the period of 2020 until 2023. Meanwhile, different with Kumpulan H&L High Tech Berhad that are starting with 29.15% debt equity ratio, the showing sign of decreasing in 2021, then it goes up in 2022 and maintained in 2023. Showing sign of consistency in terms of percentage even though have fluctuation shown by the graph. To compare HSS Engineering, do show a good improvement on their capital structure by less reliance onto its debt to equity. This indicate sign of improved financial leverage and help reducing financial risk, while Kumpulan H&L High Tech Berhad only show maintain a consistency. But it is not a bad thing as it indicates that the company is consistent and stable debt level for its equity.
Lastly, I will explain about the trend and comparative analysis for profitability. For trend analysis between these two companies from 2020 until 2023 is that HSS Engineering Sdn Berhad show to us by the graph is more upward trend through 2020 until 2023 and a very strong upward in 2023. Meanwhile, difference with Kumpulan H&L High Tech Berhad start with the lowest profit margin compared to the other 3 years in 2020 and experience a major increase in 2021 and the major decrease in 2022 and followed by in 2023. To compare between these two companies, both started with low profit margin, but Kumpulan H&L High Tech Berhad take a great turn of increase in 2021, but then it decreased, making HSS Engineering Sdn Berhad taking the lead for it, and it continue increase with the stable growth from the company.
So in conclusion, with this analysis, we can learn so much about their financial between these two companies. So the first trend analysis that we have done, which is liquidity ratio, show that Kumpulan H&L High Tech Berhad is better in terms of their liquidity into fully utilize their asset to cover their short-term ability. While HSS Engineering Sdn Berhad is less liquid and not having enough assets to be liquid to cover their short-term liabilities. So looking into the next trend analysis that have been done, which is efficiency ratio. So in this aspect, HSS engineering is the one that are better as their average collection period is near to 1.04 days, which indicate that they have an excellent management to keep up with the account receivable, and in terms of how operational management are being held. So for the third analysis is based on leverage ratio that are showing once again that HSS engineering is better in these terms as they show less reliance towards equity in terms of its debts. So compared to H&L height, taper height that are more consistent and stable in their debt to equity ratio, they did not make the graph fluctuate higher, making it higher reliance, but instead they maintain consistency that show a stable capital in the company itself. So for the last analysis trend and comparative that we look into is profitability ratio, which is in this aspect, HSS engineering might not experience sharp increase like kumpulan H&L, but its steadily growth is important because it indicates that the company is stable and improving in terms of their growth in profit. So kumpulan H&L High Tech is sharp increase is not the point that should only be pointed out, as their sharp decrease also will cause some worrisome. So with these four analyses, we can see each company trend on how their annual report it is. It will now be up to external users to choose which type of company with their financial report want to choose, and up to internal users on how they need to improve their company management in terms of activity and operational plan. So this analysis does not necessarily point back, but showing its strength and capability of these two companies.